Hey everybody, I'm Zach.
And I'm Jesse.
And you're watching the Disruptive Investing News Show. And this week on DI News, I wanted to discuss Tesla and Vinfast. So first to Tesla and one of their divisions that I think a lot of people either don't know about, or if they do know about it, they quickly forget about it. I'm talking about Tesla Insurance.
Tesla launched Tesla Insurance in 2019 in California. It's basically auto insurance, and for a while, it didn't seem to be growing much. But then, in the last 12 months, Tesla Insurance has really begun expanding into other states.
Yeah, currently Tesla Insurance is available in 12 states in the U.S. 17% of the eligible customers use it, and Tesla Insurance has seen 20% growth over the past year. So this, in and of itself, is very important, and I know what you might be saying.
How can car insurance be interesting, guys? Car insurance is one of the least interesting topics on the planet.
Well, hold on. Yes, insurance may not be a fun topic, but number one, most of us who drive at least have car insurance, so it's a huge market. And here in the US, it's a $330 billion industry.
Tesla is not only getting into the auto insurance business, but they are using their full self-driving to create a safety score for Tesla customers who use their auto insurance. What this does is allow them to change the premium month to month depending on how their customers drive.
So let that sink in for a second. Right now, most of us have auto insurance that uses a bunch of facts about us, right? Our age, our driving record, where we live, and that determines what our premium should be.
Tesla Insurance is using something different. It's saying, hey, Jesse, you were driving aggressively last month, so we're going to raise your premium this month because you have a higher chance of getting into an accident than Zach over here who is driving more safely.
So this is disruption. Using technology to improve a service. So in this case, if Tesla Insurance was available in my state, which it's not right now, I could sign up for it and save money on my premium if I choose to drive safer.
Right. Now, there's a whole discussion that we're not going to have here about like whether or not the safety score is good, that like night driving shouldn't be such a negative. I'm going to push all of that aside. It's just that this is a new disruptive thing and Tesla can change it however they want, whenever they want, within the bounds of regulation. And I think that that is kind of what we're talking about here when we're talking about it being disruptive. But the news this week is that it looks like Tesla Insurance may be jumping across the pond to Europe.
So Tesla's job posting for legal counsel Tesla Insurance Europe was just published, and it says that the position would be based in London, and the successful applicant would help, quote, build and lead the in-house legal function of the insurance company to guide through the legal and regulatory landscape of an insurer operating cross-border in Europe.
For some context, Europe's auto insurance market is estimated at about $150 billion in 2020.
So again, this is why we're talking about auto insurance on Disruptive Investing. Tesla's ability to use their computer on wheels cars to capture better driving data and set more accurate auto insurance premiums may not be sexy, but it is disruptive, and I predict it will enable Tesla to quickly grow in a market that doesn't have much innovation.
Now, you might be saying, I've seen those auto insurance commercials with people using their phones while driving to capture their acceleration and speed and share it with their insurance companies for better rates.
And yes, insurance companies are trying that. But I would argue that this shows that those insurance companies do want this data. It's just that phones are not the best way to gather it. Computers on wheels, or Teslas, are. And so that's kind of the key here, right? A Tesla can tell you so much more about what the driver's doing than a phone can. A phone is just trying to kind of guess at that. And here, Teslas can tell you pretty much anything you want to know about the driver.
And I think to kind of defend Tesla and their safety score, I think that right now it is rather rudimentary. But I think that Tesla should be able to use all of the information that it can gather to see how good a driver this person is. For instance, I was driving behind someone the other day, and to their credit, they had the, student driver sticker on their car. They weren't like, this wasn't a sanctioned, student driver course thing. But they were driving, I believe, 19 miles an hour in a 30, slamming on the brakes every 500 feet or so.
You got to learn.
And, so they're learning. I get that. But I've also seen 50-year-old, just normal looking people doing the same thing sometimes.
Right.
And it's like, right, the insurance company isn't necessarily going to know that unless your car could tell them.
So this is something that's bothered me for a long time. Yeah. We're all basically subsidizing bad drivers. So you take a 16-year-old. If you look at the data on 16-year-olds, on average, they're going to get into one accident. Like it's just going to happen, right? Because they haven't learned very much. They don't have much experience. They also don't, their frontal lobe isn't developed. So all these things, they're going to speed, talk to their friends.
And their premiums are higher, but they're not
high enough.
Proportionally higher.
Right. And so if we could get to the point where people were actually paying what they should be paying, then I think the world would be a better place. Now, you might be one of the bad drivers, and you're like, but I want you to subsidize me, Zach. I don't want to subsidize you. I have not been in an accident, I don't think, ever. And so why should I have to pay for all the people who've been in multiple accidents?
And the good news is, as we go forward into the future, there's probably going to be the opportunity for people to have cars that drive themselves. And by that, I mean they don't own the cars necessarily, but that they'd be able to basically hail a car for cheaper than they would be able to own a car, or cheaper than they'd be able to hail a taxi or an Uber.
Now, I want to talk about when you invest in Tesla as a stock. Look, we're not financial advisors. Don't take any of our advice here on investing.
And we're long on Tesla.
Yeah,
so
and do your own research.
We're biased.
Tesla is not just a car company, as we talk about often, and this is proof of that, right? They have an insurance division. And so if you invest in Tesla and you're like, yeah, but I've got to diversify. Well, yes, but Tesla's already diversifying itself because they're getting into auto insurance, which is going to be a huge market for them.
So this would be like if you could invest in not only a disruptive car company, but also into a fairly disruptive insurance company, and invest into a company that could be building humanoid robots in the near future, and investing in a company that is working on full self-driving technology for robotaxis, and is working on solar roof systems that don't look like solar panels, they look like, and also looks like batteries, a company that works on batteries that go in people's houses, and a company that makes batteries that connect to the grid, and a company that makes the software that connects the batteries to the grid intelligently. I could go on.
Right.
There are a few more.
VPPs.
But I'm not gonna bug you with that. But that's kind of the interesting part about Tesla, and at least one of the things that I think that we use to justify having probably too much Tesla in our portfolio is that, well, technically, I mean, think about it like that.
Exactly. Well, now let's shift our focus to Vinfast. That's the Vietnamese EV maker founded in 2017.
You know that Zach and I love EVs, and we want to accelerate the transition to sustainable transportation. But this is disruptive investing, and Vinfast is talking about an upcoming IPO. So we want to know if this new EV maker is being disruptive or hitting roadblocks.
So I was pretty excited that Vinfast had already shipped 999 VF8s. Those are their fully electric SUVs from Vietnam to California back in December. It seemed lightning fast to break into the US auto market. I mean, many competitors like NIO and XPeng have taken much longer. But, well, we just learned that those nearly 1,000 VF8s are still sitting in parking lots in California. They have not been delivered to customers yet because of software issues.
So Vinfast missed their 2022 deadline?
Yeah, so those deliveries, they now say, will take place later this month. This is worrying to me because with cars that are computers on wheels, software becomes very important. And if it takes your software team weeks or months to get the software even to the point where you can deliver your cars, then I think you're exposing your weak link.
So we've talked about this on Tesla Time News.
Oh, and by the way, you can watch every Tuesday on our Now You Know channel, Tesla Time News. It's our weekly show that we've done for over 300 episodes.
Now that Vinfast has released the VF8 and had the range tested by the EPA, it's, well, kind of lame.
Yeah, so 179 miles of EPA-rated range, even though Vinfast claimed it would have 292 miles when they introduced it.
Now, Vinfast did say that the new software update would increase the range to 207 miles, or 333 kilometers, but that's the same software that delayed the deliveries. So it's not really a good look.
Right. I mean, I think they were trying to get the range numbers up, and in doing so, it took them longer than they expected. I think that was also because a lot of buyers were probably saying no. They probably reserved the car based on the original numbers, and then when they went down to pick it up, were like, I'm not taking delivery of that. So there's another batch of Vinfast EVs coming into the US in Q2, but we just heard from Reuters that Vinfast is cutting its workforce in the US and Canada. They're consolidating their entity here from 2 to 1, and they're calling it Vinfast North America.
They currently have about 150 employees in North America.
And the last 2 points about Vinfast I want to talk about, I was originally thinking that their pricing was kind of cool. They're doing this thing called BaaS, or battery as a service, where basically you buy the car and then you do a subscription to the battery. And that's cool, right? Because then if you're worried that the battery will wear out or that there'll be new technology someday, you don't own the battery, you're just leasing it. But now that the details have come out, it's pretty expensive. So the car has a 90 kilowatt hour battery. The starting price for the City Edition is $42,000. The Eco Edition is $55,000, and the Plus Edition is $57,000. But you then have to either buy your battery for $20,000 more or pay $169 a month for this battery as a subscription. And I mean, we talked about the car. It's pretty cool. It's got 402 horsepower, 457 feet-pound of torque. So it's, it's going to be probably a peppy car. I haven't driven it yet. But it won't qualify for the $7,500 federal tax credit because it's made in Vietnam. I think this price is just kind of too high. And then the last question here is, and I'm not trying to make fun of the country, but it's a new car company. It's from Vietnam. And so I don't think anyone here in the US has experience with that. It reminds me of the 80s when Japanese cars came and everyone's like, Japan can make a car? And it took them many years to build up, kind of customer buy-in. So my thought here is like, that's not going to be an easy sell. A Vietnamese car company, brand new at making EVs. It's an EV. They don't have a charging network other than the public charging network at the moment. They don't qualify for the federal tax credit. They have this weird battery as a subscription thing. Their range is lower than they said it would be. Like, I don't know. That's a lot of tough rows to hoe.
And then they just had a weird software thing where they couldn't deliver the cars. And it's like, would I want them to push the cars out the door with bad software? No. So I mean, I'm glad that they didn't deliver the cars with big problems. It's just like having a 2-month wait on software is a little concerning.
But here's my question. Let's say you buy the lowest edition, the City Edition for $42,000. You do the $169 a month for the battery. You're getting what they say is 207 miles of EPA rated range. We haven't seen that tested yet. That is way lower than a Tesla Model Y with 259 miles if you get their cheapest version. And the Model Y would probably cost less because you're probably going to get the tax incentive. Exactly. That was my point. And then you get to use the Tesla supercharging network. You get to use autopilot, all those fun things. So I'm just like, how are they going to compete since, as we've said many times before, you are competing with Tesla and there doesn't seem to be that much disruptive about Vinfast.
And I think that a lot of people find it really hard to just pick a winner like Tesla and then say there won't be any other winners. And I agree with that. I don't think that that's necessarily the case. It's just we haven't really seen that many other winning cars.
Right. I mean, we're on the lookout for them.
I mean, I'm totally on the lookout. I think that Hyundai would probably be the first, ones that come to mind, but they don't have their own charging network. And I'm not saying that they need to go build out a giant charging network. I'm just saying
I do.
They're reliant on Electrify America right now. And as we've seen so many times, it's not a reliable charging network. And you wouldn't drive a gas car if you showed up to gas stations all the time and they didn't have any gas in them.
Yeah, I mean, I just think VinFast is looking to this IPO coming up soon, and I would be very wary of that if I'm an investor because there just doesn't seem to be much to attract me to it.
Yeah, it's like the market conditions right now are pretty bad. I mean, maybe the price is going to be a little bit lower because of those market conditions, so the IPO isn't going to be as high, or you're going to get a better deal or something like that.
Yeah, but that's less money for the company. I'm right. Look, comment down below what your thoughts are on VinFast. I'm really interested to get behind the wheel of one because, I mean, a lot of this does depend on how cool the car is. And if you have driven one or you're about to get one, please send us some video and stuff to hello@nowyouknowchannel.com so we can check it out. We'll see you next week on Disruptive Investing. Thanks so much for joining us this week.